Hello everyone. Today I will teach you how to sell short value stocks using TradeStation platform. You will also learn how to use trailing stop technique so that you can lock your maximum loss. The technique can also help you to accumulate and secure your profit by following the stock price when it's going down and dynamically updating the exit price according to the current stock price. But first of all, I think we should discuss about the definition of the short selling. What is short selling? So when you believe that the price or the value of something will go down in the near future, then you can actually gain profit from that thing by selling short. So the first step to sell short something is you need to borrow that thing first from someone else, and then you will sell it immediately, and then get the money and keep the money. Just hold it for a while and wait until the value or the price of that thing go down, and then you use the money to buy back thing, and you keep the difference as the profit. And the same thing, the same rule apply for the stocks in the market. For example, for this one, if you are confident that the price of this stock will go down in the next couple of weeks or months, then right now you can make short order to earn profit from it in the near future. Today I will discuss with you about two ways to create short order using the TradeStation. Actually, it's not only TradeStation, but the same methods can be found on other platforms. For example, the Thinkorswim or the interactive broker platforms. They're all the same. The only difference is the button or the functionality, the position of the button you click on those platforms. So there'll be two ways to create short order. The first way is simple, but it's unsafe because it doesn't have a risk management with it. The second one is more safer because we will use the trailing stop as the risk management so that we can minimize the loss. So I will demonstrate the first way. We need to click the TFC symbol, then click the trade manager. That we can type the symbol letter in this box, and then next step is we set the quantity. I set it default to 100, but you can set it to 200 or 300 depending on your position size. And then in the order type you can set the market order or limit order. If you set limit order, you can use the current stock price at $45.68, or if you want to be in the market immediately, you can use the order time market, which means we'll use the current price of the stock. And then after that, you should set the duration to good to cancel, which means the order will be in the queue and wait until we cancel it or until it is filled. The final step is just click the sell short button. Click the sell short button. Click yes. Look at the confirmation. It shows the estimated credit to $45.69, which means when we make the short order, the TradeStation will give us 100 share of the TFC, and they help us to sell that 100 share immediately to an exchange, and then this money will go directly into our account, and it just wait there until hopefully the price of the stock will go down, and then we'll use this money to buy back the stock, the 100 share, and give it back to TradeStation broker, and we will keep the difference at the profit. So I'll click yes. Today is Sunday. The market already closed. That will reopen on Monday next week. So when I click yes, the order will go into the queue. TFC here. It's going to the queue. Just ignore this one. This one I cancel this one to demonstrate the TFC. It's going to the queue and just wait there. So the reason why this method is unsafe is because you will take the unlimited loss, because you know when the price of the stock go up instead of go down, if go up, it can go up unlimited. So we will need some way to lock our maximum loss here, so that for example, if your budget is $300 or $500 maximum, then you need a way you need a way for the platform to automatically exit, to automatically get out of the close the order when the price of the stock go above a price that we preset for it. So for example, if the current price is 45, if it go up and it touch $50, we want to just close the position. We don't want to wait for the price to go up more, because we don't have enough money to buy back the stock, and that's the reason why we use the trailing stop technique here. It will help us to lock the maximum loss for us. So first of all, before we go to the methods number 2, we'll cancel this one first. Cancel this, and then we'll do it again. We click the TFC and we click the trade manager, set the same thing here, but now instead of clicking the sell shop button, we use the order cancel order, order start order many option, and then we move to the entry single order short and use the weak axis stop limit only. And we bring out a dialog with 2 rows. The first row is the sell shop order at the market price, and the second row is the buy to cover order. In order to use the trailing stop, we can see the trailing stop checkbox here, but it's disabled. In order to for it to be enabled again, we need to use the stop market order type. Yeah. So when it stop, when it close our position, the platform will use the market price to stop it, and that's the only way it can do it. And then we take the trailing stop, and now we need to figure out the amount of dollar to enter here, whether it's $5, $4, or $3. I will explain the amount of dollar here and what number we need to enter. So I will cancel this part. Let's have a look at the price, at the chart, and the price chart of this stock to see the difference between the low price and the high price. So we can start from here. At this point, the lowest price is $60 ish, and when it go up like $66. So the difference could be $5 from the low and high point, $5, and then go down here at 55, 56, and you go up again to 61, and the difference again is $5 or $6. But now when it go down, it go up, the difference is so small. It go down, go up again, the difference is so small, $1 or $2. Go down, go up, different here could be $2 or $3. Go down, go up, the difference here is $2 or $3 again. So we can expect that from this point on Monday next week, or next week, on the next 2 weeks, if the price go up again, I don't think it go larger than $5, which means if we set the limit here at $50, then the potential for the stock to go up and then go down but not pass the $50 limit is quite high, which means we have more opportunity to wait and buy the time to wait for the stock to go down again, and we can start making the profit. But the setting of the limit price still depending on your budget. Are you happy to take the maximum loss of $500 or $400 or $300? It depends on your budget. So if you set the limit here, and if it go above the $50, then your maximum loss is $500. But if you set the limit to $49, then your maximum loss is $400. And this the difference here is the number that we need to enter in the dialog box. So we go back to it, click the menu, and then with exit stop limit only, we select the order type to stop market and take the challenge stop. We can set it to $4 and then send the order. Yes, and let's have a look at the order confirmation. Again, the estimated credit is $45.69. This is the amount that will go directly into my account and wait there. I will wait until, and hopefully the price of the stock will go down. And this is the buy to cover with a challenge stop of $4, which means in the worst scenario, right from the time my order get filled, if the stock go up instead of go down, if go up, the maximum loss will be $400, which means I will spend $49.68 to buy back 100 share of the TFC stock, and my maximum loss is $400. The difference between this estimated cost to buy the cover and this one estimated credit is $400. When I click yes, it will go into the queue right here. Just go into the queue, and if you look at the chart, you will see it set the limits, the stop limit right here, $500 different from the current price. Another important thing to consider here is that for every investment, we need to know the return of investment, the ROI. So what is our ROI in this trade? we already know our maximum loss, and this is our initial the investment money. We need to have at least $400 in our account to cover this case. And so what is our maximum gain? What is our maximum profit here? I can even look at the monthly chart, and when I see in history, the stock price in 2000 in May of 2020, the lowest price could be 55. So if the market go into a recession in the couple of weeks or months, the price of this stock could go to $55. And so compared to the current price of the stock at $45, we can have maximum of $20 different, which means $2,000 profit maximum, which is our maximum gain. So we have $400 maximum loss and $2,000 maximum gain. We can have a very, very impressive ROI. We get the maximum gain, and we divide to the maximum loss, and we will know the ROI. Yeah. One more thing is the reason why I choose TFC is because it's in the financial sector as a regional banks, and in the current bearish market condition, the technology, financial, and consumer discretionary stocks as the mostly affected by the inflation, and the current interest rate is 2.5%, but I think Fed will continue to raise this interest rate maybe into 5% in a couple of months. They want to reduce the inflation as soon as possible, and hopefully that actions will push down the price of the stock, and we can get advantage from the situation, the market condition. Final thing I want to share with you is my current position. I made a lot of short order. You can see here, a lot of them is short order. I closed all of my option positions because the current market is so volatile that I don't want to keep the option positions because it takes me more time to manage the combo option permission like iron condor. It takes too much time. Another very important thing about the trailing stop tactic is that it will automatically follow the stock price when the price going down, and dynamically changing the our stop limit price according to the current stock price. So for example, if next week the stock price fall to $35, then the platform will automatically update our limit price to $39, which is $4 difference from the stock price. Another example is that if next week if the price go down to 20, then the platform will move the limit price, our exit point limit price, down to 24, which is $4 from the stock price. So just keep moving, just keep following the stock price, and once it's set the limit price to a level, then our profit will be secure forever. Just secure forever, because for example, if the stock price is down to $20 and our limit price set to 24, then in case the stock price go up again, it will, and it touch the $24, then the platform will close the position immediately, and we will take the profit, which is different from the 24 and our initial price is 45 and 68. So another example is that if the stock price fall to $30, our platform we set our limit stop price to $34, which is $4 different, and then this next day, if the stock price move up to 35, for example, $35, then before the stock price touch the 34, the platform will just automatically close our position, buy back to close, and we will take the profit from the 34, the difference between 34 and 45 or 68. Everything will run automatically, even if we are sleeping, which is very important point of the trailing stop technique. You still can manually close the your order if you think it's good enough for you. For example, if the price go like to the 35, you can manually just close it, buy back, use your money, and use the money in your account, the credit money in your account, and buy back 100 share, and then you take the profit. Yeah, currently my position, my total profit for all the short order is $5,000, $5,300, which is very promising. Actually, I have written more short order here, much more, and they will get few on Monday next week. Hopefully the S&P 500 will go further down, and I can make more profit for my portfolio. So that's all about the short selling technique. I hope you learn anything, you enjoy it, and you understand the technique. I think that's the that's very good technique to make profit in a recession, in a bearish market, especially in a recessions. So you please keep practicing in your simulated account. The more you practicing, the more you will become a good investor, smart investor. Thank you for watching. I will see you in the next video. Please subscribe to my channel, my Facebook group, and my website to get notified about my new video. Thank you, and bye for now.